Boeing reports 6B quarterly loss with big union vote looming. Boeing, BA, released third-quarter earnings on Wednesday morning, highlighting the precarious nature the plane maker finds itself ahead of another momentous moment, with a big labor vote set for later Wednesday. Boeing reported a net loss of $6.17 billion and operating cash flow of negative $1.345 billion. The company reported revenue of about $17.8 billion, down about 1% from the same period last year. The figures closely matched the preliminary numbers it released last week. Boeing said its operating cash flow reflected lower commercial wide-body deliveries, as well as unfavorable working capital timing, including the impact of the IM work stoppage. A year ago, Boeing's operating cash flow stood at $22 million. Shares were down slightly in pre-market trading. In its preliminary report last week, Boeing it would end production of its 767 tanker jet and push back the release of its upcoming 777X wide-body jet. The company also said it would take $5 billion in pre-tax charges, with $3 billion coming from the commercial airlines division and $2 billion coming from its defense business. Boeing also entered into an agreement to secure $10 billion in supplemental credit from a consortium of banks and filed a mixed shelf registration with the SEC to offer up to $25 billion in new debt securities, common stock, preferred stock, and other share offerings. The Wall Street Journal reported Boeing would pursue a $10 billion stock offering via the filing, sources said. Boeing said it had $10.5 billion in cash and securities on hand at the end of the quarter. The company also reported it had a total backlog of $511 billion, which included over 5,400 commercial airplanes. The new credit agreement and debt and stock offerings come as the company is mired in a labor dispute with its largest labor union, representing 30,000 workers. New CEO Kelly Ortberg also announced the company would lay off 10% of its labor force, or around 17,000 employees, across all the divisions to shore up its financial position. The layoffs, which come as early as next month, will occur as Boeing's labor dispute with the International Association of Machinists, IAM, may be nearing a close. Boeing workers will vote later on Wednesday whether to approve a new contract proposal. The cost of the strike so far has been substantial for both Boeing and the workers, with one trade group estimating the total cost is nearing $5 billion. First and foremost on everybody's mind today is ending the IAM strike. We have been feverishly working to find a solution that works for the company and meets our employees' needs, Ortberg said in his prepared remarks ahead of the Boeing's earnings call. Ortberg also added, "We need to reset priorities and create a leaner, more focused organization."